Magic.
Blast off?
Yeah, if I put it on the right stuff. There we go.
All right. It's pretty loud in my...
Oh, it is right now? I think I turned you up a little bit there.
Excellent. Yeah, that's
I don't know which ones you...
It's fine. It's fine. If I start talking too low because I can hear myself too loud, just let me know.
Oh, yeah, that's right. That's why I have it turned down. I don't have any problem talking loud.
Yeah. We know.
Jerry starts whispering. Let me tell you about the stock market.
Yeah, well, I might be whispering anyway because it's been a long weekend.
How was your weekend?
It was pretty good. My 30+1 year anniversary.
Because you guys skipped last year.
Yeah, because it was supposed to be last year because of COVID. My Naval Academy reunion. It was
were
great.
90?
Class of 90.
Class of 90.
Yep.
How are all the old people doing? How did they handle it?
I didn't see an old guy in the room, bro. Not a single one. It was amazing.
There wasn't any gray hair?
No, not a one. No bald guys. None of that. No, it was a good time. It was good to see everybody. And
Good.
Football wasn't so good. We got clobbered.
I wasn't going to bring that up.
Marshall kind of crushed us, but
I didn't watch it. But
hey, that's the way it goes. I watched the first half of the game, and then it was off to the tailgate tent, and it was all downhill from there. But it was fantastic.
Well, how did the stock market treat us last week, though?
Stock market last week was pretty good. Yep. Labor Day weekly update show 5 September 2021. All right. It was a pretty strong week. C fund was up. C and S fund, strangely, I had to do a double take on that, but they were both up 0.58%. I fund was the big winner, up 1.7%, and the F fund was down a little bit, 0.07%. So this week is actually, unfortunately for me, it's more talking than charts. But we're going to go through. Did you get this email from JC last week?
I did. I didn't. I haven't read it yet.
Yeah,
it's in my inbox.
I'm gonna read it here we're gonna go through it on 2 slides. It's
nice.
Great. We've talked about him a lot. All-Star Charts, JC Peretz. Definitely want to follow him on Twitter and.
Yeah, it's particularly if you're interested in like bigger market stuff. Obviously, he's not talking about the TSP,
right,
but he's talking about technical analysis, and he is a whiz when it comes to that stuff.
Yeah, he is an expert, no doubt about it. And what I really like in this email, we'll get to it. He does not do the crystal ball thing. He sort of plays the market in the same way that we always talk about. He wants to be on the right side.
Right.
And this email talks about it.
Who doesn't want to be on the right side?
Well, everybody wants to be on the right side, right? But actually, he gets to this in the email. Is most people are more interested in being right about the prediction that they make
than being
actually on the right side of the market.
Yeah.
It's human nature,
yeah,
right?
Absolutely.
It's human nature. I mean, I have a system. I know my system works. I'm sticking with my system, regardless of what the market's telling you.
Yep.
So, then we're going to think through the next couple of months. We made it through August, had some pretty decent gains. Seasonality is definitely looming. We're going to look at a chart that shows kind of what August, September, October looked like over the last 3 years, and who knows what it's going to look like this year. But to that end, basically, we want to know what our lines in the sand are going to be for when the market does turn here during this likely volatile time of the year.
Then that's an important thing for people to really grasp. When we call it lines in the sand, I'm not really sure where that term comes from. Maybe it's military. I don't know. I don't remember. I mean, we've been using it forever, at least in our world. But the idea is, those of you watching this, and those of you that we're trying to educate, that you want to have your lines in the sand drawn prior to when the market does something. So that what that means is, I already have made a decision, pretty much 90%. I know what I'm going to do. I'm just waiting for that to happen.
Right.
That's way different than trying to time the market or guess what's going on.
Right.
No, I know that I'm going to do X when this happens, and that's a line in the sand.
Right.
Yeah.
If the market rolls over and it gets below this point, I know that the probabilities are that it's going to continue lower. So if you have that line, and the market crosses that line, you just get out.
Right.
If it turns back around and goes the other way, you get back in. It's not now. There's the 2 move a month rule that we have to take into account for TSP, but
by and large, you got to have your lines in the sand drawn. You have to have your decision points.
Right. And then we're going to do cup and handle mechanics. Had a special request for, can we talk about how cup and handle chart pattern works? We're going to go through that, and then the 18-month weekly charts. All right, so JC's email. Think about it. You don't know what the market's going to do next, and neither do I. No one does. So why not keep an open mind, right? Why must we be stubborn? Why do we have to put our ego ahead of profits? Are you here to be right, or are you here to make money? This is the last week of August. This is the time to think about that sort of thing. This is the time to prepare ourselves mentally and physically for the fall. Vacations in the Hamptons are over soon for the world's largest portfolio managers. They'll be back at their desks in a week or two. Will you be ready? Because they're the ones that drive the market. They are the ones that drive the market. It's yes, earnings and world events and all the rest of it, but when the big guys come back to work,
institutional
money comes back, they got to put the money somewhere.
Something's got to start shaking out. And I had this conversation with somebody the other day at a restaurant. A lady was asking me about, market stuff, and I never pretend to be, an analyst. I just work with one.
Right.
But it was amazing at the minutia that she was focused on. Every little detail, and I was like, it's overwhelming. First of all, don't get into anything you don't understand, right? I respect that when Warren Buffett says he doesn't get into crypto because he doesn't understand it, that makes sense to me.
Sure.
It's not that he doesn't get into it because he doesn't believe in it. He's like, I don't understand it. 90 some years old, I don't care, right?
Sure. Yeah.
His business partner is an old guy, and he does care because he understands it. So I told her, don't get into things that you don't understand or not willing to find out, to understand. But bigger picture is, you're not driving the train.
Yeah.
We as retail investors are not driving the train. Yeah. Institutions are. And so that's more important to pay attention to things like that. Like most institutional investors are on vacation right now because it's kind of the way the world works, right? Yep. People go on vacation in the summer.
Go into that in the newsletter. So if you're a subscriber to the site, the newsletter this weekend, one of the charts I have up there, it's Bitcoin. It has nothing to do with Bitcoin, really. It's really a chart about the volume. And so it's an intraday chart of Bitcoin, and it shows the chart and the setup and all that. But the volume that's been happening in Bitcoin over the last couple of months has been, like, no one's been talking about it. Very few shares have been traded, right? In the last couple of days, volume, is like taken off. The price hasn't moved a whole lot yet, but that's like a footprint. It's like when big institutional money comes in, they can't do it in little pieces. They do it in big chunks, and you see it in the volume chart.
They don't buy a little bit of stuff.
Right. No, they buy a little lot of Bitcoins. Yeah. So, okay. So JC says, he said, will you be ready? I plan to. And I plan to be open to all possible outcomes. I stopped caring. Where's my pen here? I stopped caring what the market does a long time ago. I just want to be on the right side. That's all. What about you? Do you care which way prices go, or are you willing to adapt to the market? Let us know. And he would love to have everybody let him know. You can't obviously hit the link from the thing, but it's info@allstarcharts.com.
Yeah, it's easy to subscribe to. I mean, we're not paid subscribers there because you want to talk about paid subscribers services. I mean, his is in the thousands of dollars.
$2,500 a year.
Yeah, and
at best, and that's on sale.
That's discounted. Yeah, I was going to say that's not normal price. No. Anyway, the point is, you can get on his email list though for free, and we enjoy a lot of the information that he has.
Puts out great stuff. All right, so obviously JC is thinking about what to do for the next few months, and we're going to kind of talk about at least how we're thinking it through. So we put up this slide last week, and last week we were, pretty much right here. And now we are another week into it, and we're a little bit higher, so we're like up here. But we should be historically like here. So we're beyond due on a historical basis for a downturn. What this was last week, if you didn't see it on the show, the blue line is kind of a compilation of these cycles. So the 1-year seasonal cycle, 4-year presidential cycle, and the 10-year decennial cycle. You can Google them and check them out, but NDR Research put this chart together, and it kind of went viral a week or two ago. The yellow dotted line is the S&P 500, our C fund, and the blue line, the data goes all the way back to 1928. through 2020, which is how it gives you like an anticipated which way the market's supposed to go. So it's historical data, and right now we're kind of beating the odds, historically, because we're up here and the historical number is like down here right now. So and we're going into this seasonal. This is mostly because of the seasonality. Usually the market, if it's going to tank at any point during the year, it's usually August, September, October, which is why we get this big decline. And again, this decline, it's not in a real basis. It's not like the market comes up and then crashes down like that. The idea is to look at the trend. So the trend over the basically from August to October, the trend over those years is obviously down. Whether or not that happens this year, don't know. Want to be on the right side of it though. Okay. Another way to kind of think through what we're going to do for the next couple of months. So obviously from this chart, if we're here and history tells us we historically should be down here, then I'm pretty much on the edge of my seat waiting to potentially reallocate if we do get a downturn. Another way to look at it, this is I took this off of Wikipedia. It's not the S&P 500, it's the Dow Jones, but it's a list of the top 20 biggest percentage moves down in one day, right? So the list of the largest daily changes. The biggest ones don't happen in September, they happen in October. And they're pretty well distributed if you look at it. The COVID one in March was the second biggest one in the last, I don't know if this goes back like 100 years. It goes back really far. So 1987, for anybody that was around for the crash of 87, that was a big one, 22%. And then that almost 13% one on that first big down day of COVID, that was a big one. But so you got October, November's in there, August, October, and one September. So the 20th biggest loss was in September at 7% in one day.
Can you zoom in just for a minute to kind of see the numbers a little better?
Let's see. Let's do this one first. Yeah, so the top 11 there, 1, 2, 3, 4, 5 out of the top 11 were in October. And 1, 2, 3, 4 of the last, 9. So October is the big month for the biggest moves down. But August, September, October are the months when volatility is the highest. So, and also March comes up in here a lot. You got 1, 2, 3, 4. Yeah, March and October are definitely the biggest months for the big, one day down moves. So if we were able to get through September without a correction, October would just be looming like crazy, We'll see. We'll see how it goes. So here's a 2-year, 3-month weekly chart of the C fund. And I basically wanted to be able to show the last 2, and then the one going forward, August, September, October. So going into COVID, right, if you remember, 2019 was a really big up year, but this was the section. All right, starting here, that we had a top in late July, had a dip in August, came back, tested the prior high in September, and then a little bit down into September, and then we took off again in the beginning of October. So it wasn't it was just a consolidation, right? It wasn't a big crash, it was a consolidation. That's fine. Then we had, coming off of the COVID low, we had what is now we're saying, because this is a 1, ABC 2, and we're in the 3. That 2 leg happened August to November. So what's going to happen out here is the question. And we don't know. But, things tend to happen in August, September, October. Right now, we've been talking about this a lot. We're going to talk about here at the end when we get to the 18-month weekly charts. But until we get a close below that 10-week moving average. So in this case, we're looking at where each tick on the chart is a week. That line represents the 10-week moving average, which roughly corresponds to the 50-day moving average. So until we get a C fund close down here below the 50-day moving average, and it can't get back above the prior high. So let's say next week it tanks, and we get a close for the week down here below that 10-week moving average line, and then over the next week or two, it can't get above the prior high and rolls down. Now we get a problem. That's what a big problem. That's the beginning of a potential big problem. What could happen? Market comes down, closes below the 10-week, comes back up, tests this high, and goes sideways, and then keeps going higher. Which, as we've talked about, that's kind of what we expect, because we want to see a 1, ABC is 2, 3, some kind of consolidation here for 4, and then a 5. That's plan A, but we've talked about that before. Okay, so what other lines in the sand? We kind of just did that. So here's the C fund year to date daily, right? So now we're not looking at a weekly chart, we're looking at a daily chart. The blue line is the 10-day moving average, and the red line is the 50-day moving average, which roughly corresponds to the 10-week moving average line, which was this one. Okay. So like I said, for me, now we're on a daily basis, right? What we have been doing is basically, one of the big indicators is if price closes below the 10-day moving average, it would put up like the first red flag for me. But every time it's hit the 50-day moving average, it's recovered throughout the year. So I'm more likely to give it the flexibility to come down and test the 50-day moving average line and bounce higher, just like it's done every other time for the past year. A close below that 50-day, if next week we come down here, we close down here, we move back up and we can't get above this high, and we start coming down. Now this 10-day rolls over and becomes resistance, and we can't get above it. And that's how you start getting this. So that's what we're watching for. So for me, the line in the sand really is a close below that 50-day moving average. It's going to be, I'm not sure, I didn't do the math, but if you divide out, the 50-day right now is at 43.96, and we are right now at 45.24. So that's maybe 2 or 3%. So I'm willing to accept that 2 or 3% loss to make a final decision of whether or not I'm going to get out down here at the 50-day moving average line. So I'm not trying to time the top of the market. By definition, I have to be willing to accept whatever the loss is going to be to get down to my line in the sand where I finally actually do make a decision. Okay. Cup and handle pattern. So all this is off of stockcharts.com. If you go to stock charts and look in the what do they call it, like the stock charts library, or it's basically anything you want to know about the stock market and all the different patterns and everything else is in there in stock charts.
Yeah, they got like an educational section.
Yeah,
I don't remember what it's called either.
Yeah, I don't remember, but you don't have to be a subscriber to do it.
No,
you can
it's
just
free.
Go to it's free. So cup and handle pattern was actually identified by William O'Neill. Was introduced in this book in 1988, How to Make Money in Stocks. They will actually send it to you for free if you sign up for Investors Business Daily. William O'Neill is the founder and publisher of Investors Business Daily. So what basically happens on a cup and handle, there's all kinds of rules. Investors Business Daily, their methodology is very specific. They only want to be in stocks that have all kinds of underlying fundamentals that are really, really positive, and then they apply technical analysis to that, and that's how they make their picks. But in terms of cup and handle, you want to have a pretty good move up. Cup and handle is a continuation pattern. So you have a pretty good move up, you have some consolidation. It's relatively shallow, the consolidation, which creates the cup. So you have the beginning, the top, and then the cup comes up and should hit either at or just below the beginning of the cup. Right, so here we have the cup. And then you should have 4 days to 4 weeks of a handle. And the breakout happens once the price gets above this level right here on the cup. Ideally, you want to see it happen on big volume, and which happened right here. So you had a relatively big volume as price was breaking out of that line. So we talked about line in the sand. In this case, the breakout happens when this line is violated. So you got this consolidation in the cup, you got a handle, it shakes everybody out that thinks that this is actually a double top, and then you have the breakout, and that's the time to get in right there. So in IBD, they say have a 7 to 8%, 7 to 8% rule. So you don't want to accept more than a 7 to 8% loss. It's kind of an arbitrary number. For me, if the breakout happens and price rolls over and closes again below the line of the cup, then it's a failed pattern and I just get out. So you kind of don't want to buy it up here when it's already pretty far extended from the breakout point. Ideally you want to buy it right there in the breakout, and then if it rolls over you can just sell it and you haven't lost much. If you buy it here after a cup and handle breakout, if you're too far ahead, then you're risking all of this if it rolls over. So that is the idea of how the cup and handle works. So some of the rules, it's a continuation pattern. So the idea is the market comes up, consolidates in that cup and handle pattern, breaks out, and the trend should continue in the direction of the previous trend. So ideally, you want to get it early in the cycle, because the more mature the trend, the less chance that the pattern marks a continuation, or the less upside potential. So if the stock has been rising for a long time and then does this consolidation, maybe it's a 4 in an Elliott wave instead of a 2. If it's a 2 and you're buying in at the beginning of a 3-leg, you got much more room to run higher. If it's a 4 cup and handle, you have the 5, but that's not as you don't have as much potential gains as you would if you had bought it sooner. So cup should be U-shaped and ideally relatively flat. You want to avoid a V. It doesn't make for a very good cup and handle pattern. The softer U shape ensures that a cup is a consolidation pattern with valid support at the bottom of the U. The perfect pattern would have equal highs and lows on both sides. It would look just like a cup or saucer, but it's not always the case. Like I said, there's all kinds of rules. You guys can go through it. It talks about Dow theory, how deep the cup should be, what the handle should look like, how long the cup and handle pattern should be, what volume. The big thing is volume should substantially increase on the breakout above the handle. That's really the big thing. And then the projected advance after the breakout can be estimated by measuring the distance from the peak of the cup to the bottom of the cup. So that's your minimum expected target after the breakout. Okay. So as with most chart patterns, it's more important to capture the essence of the pattern than its particulars. So yes, there's all kinds of rules, and it helps a lot to understand the rules. But in general, when you look at it, if you look at enough charts, you can see the cup and handle. So I was looking for an example, and I was going through my watch list, and Snap. We've done Snap before as a bonus chart. And so basically this is a bonus chart here. So this was their example of the cup and handle, right? We came up, we did the cup, we got a pretty, I don't think actually this is a great example, to be honest, because ordinarily what you want is the handle to go relatively sideways. This one was a pretty deep handle.
Yeah. It's not the best example, but it's still the. But I think what's important though. So I started thinking about this when you were showing that, and that's on stockcharts.com, right?
Yes. Yeah.
So they didn't choose the greatest example of it, but I think it is a good example of it doesn't have to look perfect.
Right. It doesn't.
The idea is that there's a cup and there's a little piece here.
Yep.
That's the cup and handle. It doesn't have to be like this flat thing that it doesn't have to look magically just like a cup, right? With a little handle. That's the hardest thing I think for a lot of people, at least for me, visually sometimes seeing what is there, right? Being able to just kind of like chop out that piece and go, oh, that's a cup and handle. And what I would say to people that are trying to learn how to do that is the more you look at it,
practice,
the more you look, and you can't always look at what's going on right now. So what you do is you go to sites like stockcharts.com or whatever that have educational pieces in there built in, and we don't try to recreate because there's a lot of that out there already. So we haven't really done that on our site because I don't think it's a good use of time because there's a lot of it out there for free already. Right. If you're really interested in it, the point is the more you start looking at it, the more you go, oh, okay, I'm kind of that way with the Elliott Wave stuff. Like I don't always see it exactly. Like I have to sometimes kind of like, zoom in and out to go, oh, okay, now I see the 1, 2, 3 and the 1, 2, 3, 4, 5. It just takes time. And it takes a lot of looking at it.
After a while, you see it. Stuff just jumps out at you on the chart.
Yeah, and the point I wanted to make really was about that handle because it doesn't really look like a handle. That's a weird looking handle, but it's still a handle in theory for what we're looking at, right?
Yeah.
The idea behind it, right?
Yeah.
The fundamental.
So real time, actually, this one.
So we're back at the Snap.
We're back at Snapchat. I guess, right? Snap is Snapchat, I think.
I have no idea what Snap. I mean, I know what Snapchat is.
I'm pretty sure.
I don't know if that's what Snap is.
I'm pretty sure that's what it is. Yeah.
We didn't look it up.
Yeah. At any rate, the real time, right? So we had a run up in Snap. We have the cup, and one of the biggest things is that this edge of the cup is lower than this one. If this was higher, it could still be a cup and handle. You would see it and say, well, what's the big deal? If this high was up here at 75, could it still be a cup and handle, right? If it was up here and this handle was like that, it could be, but it's much less likely to be successful if this side of the cup is higher than this side. It's just something to keep in mind. So in this case, this side of the cup is lower, which is good. We got the cup. We got a handle that's pretty deep. If the handle goes below the bottom of the cup, it is not a cup and handle.
Yeah.
That's a
part of the rules.
That's part of the rules. So we had a giant gap up for a breakout. And then we consolidated. So this is the beginning of the cup. We haven't really gotten out of the range of the beginning of the cup. So like I'm not buying Snap yet. If it got up here at 80, if it gapped up next week, it would be a much better buy. Right now, it was a huge breakout. So it's a huge gap. So there's a good chance that the gap gets filled. So it comes down here to maybe 65-ish and then goes higher. It was such a big gap, which I think is how we ended up having this consolidation after it. Because people don't really want to buy. It's a lot more risky to buy after such a huge gap because everybody's expecting the gap to get filled. And once the gap gets filled, chances are it goes higher. So for me, because Snap is on my watch list, so I'm looking at this sideways consolidation. I'm sort of expecting it to break down and fill the gap, and then it has to come back up. Now this is going to be resistance, so it's going to have to work through this price level again to go higher. So we'll see how it goes. But it's an example of how you see the cup and handle, you see the breakout. Okay, now we're consolidating again, so where do I want to get in? That's how you would do it. Okay, that's pretty good for cup and handle, I think. All right. The TSP fund charts.
Weekly charts.
All right. I sound like a broken record because it's been the same thing here for months and months and months. No reason not to be in the C fund right now. Taking out seasonality and all the other stuff that's going on in the world, price keeps moving higher. It just is. The indicators are all at the upper levels. There is no reason to be out of the stock funds at this point. If you are out of the stock funds, it's because you're anticipating something happening and you're not going with the market. You're your ego is in the way. You have to be in the stock funds when the stock market's moving up. It's just the way it is.
Or you go back to the kind of seasonality thing we've talked about, where maybe you're just in a place right now, because we've talked about this. Maybe, if you're out for a reason, that's a good thing.
Meaning, you're in the Hamptons, maybe you're on vacation.
Like I'm on vacation, or I'm not watching the market, so I'm out. That's a whole different reason, right? Hopefully you're back to paying attention. You're back in because you want to take advantage of this uptrend.
Yeah, because when it ends, it's likely to end for a minute. So that's the C fund. S fund chart is actually pretty interesting because we've been in this sideways consolidation. Last week we had a pretty big move higher, and then this week we did a consolidation, an intra-week consolidation off of last week's big move. So we didn't get a move down like we have throughout most of the year. We've done this up and down pattern on a weekly basis. You can see it, and you can see it's a little bit different now. You got last week we had, where was I? Last week we had a big move up. And whenever we ordinarily had that before, right back here at the beginning of it, we had a big move up, had a little move up, and then a down. One big move up and a down. A couple weeks up and a down, right? A little bit up and a down. So hopefully we're breaking out in terms of price. We're above the prior high. So hopefully we are in the very early stages of a breakout. What we really want to see is this part right here on MACD. So you see the MACD line starting to turn up, and the histogram, the blue on the bottom, is starting to, looks like it's wanting to move positive. If that black line crosses the red line to the upside, that'll be a very bullish indicator that prices are moving higher. So I'm definitely watching that MACD line. But the S fund looks pretty good. I fund actually had the best week. It was up 1.7% for the week, and it's been in this consolidation also, not as long as the S, but for the last couple of months, and looks like it popped out this week. So this could be 1, 2, 3, 4, and we're just beginning the 5 leg on the I fund. That would be my plan A for the I fund. And we got the same thing down here with the MACD. You got the lines just about to cross. So you definitely want the stock funds confirming each other, and it looks like the I and the S are going to confirm, and the C is already moving higher. So again, no reason not to be in the stock funds at this point. F fund, also really no reason not to be in the F fund. So if you're worried about stocks, or if you got say half stocks, half bonds, or however you want to play the TSP game, just like the C fund, unless and until the I fund or the F fund closes below its 10-week moving average line, it's going higher. So there's not really any reason to be out of the F fund at this point. But you got two, not huge volume down weeks, but the last 2 weeks have both been negative, but it's holding pretty steadily there above its 10-week moving average line. So we'll see. The RSI, topped out back here and is starting to potentially trend lower. MACD looks like it's getting ready, thinking about rolling over, and the slow stochastic is just barely above that 80 line. So it'll be an increase in interest rates will drive the F fund down. So we'll see what happens next week. But for me, I'm in the stock funds, and we'll be there until the market tells me to do otherwise.
And questions. Do we have any questions? If we do, please put them in the comment section below the video, wherever you find it, whether you find it on YouTube, you find it on our website, you find it laying in the street.
I would have a question too if it was laying in the street.
Wherever you find this video, ask us questions. You can also just email us, from the website if you have questions. Otherwise, because we love getting feedback on the videos, things that you want to see in them, and hopefully you get some education out of it.
You got all day tomorrow. Well, probably have all day tomorrow. Everybody's off. It's Labor Day. So take a look at definitely read the newsletter. There's going to be some interesting, that volume piece is pretty good about Bitcoin and the volume for the last couple of days. And So
and if you haven't downloaded our ebook, you can always check that out anywhere on our webpage. You can see download our new ebook. There's a button there, and it'll take you into you can learn all sorts of stuff about how to manage your
TSP. All kinds of options.
Plans. Absolutely. All right. Hope you guys had a great weekend. Hopefully you have a great safe weekend, and we will see you next time. We're out of here.
That's it. Peace.
Deuces.